He did it! He really did it!
Ignore the purple lines and just focus on the gray areas. The gray areas are my supply and demand, right? Notice how my supply and demand is very tight. We broke through the demand level right here, fell on down. That allowed us to push down further, creating a new demand level here. And notice how we ran all the way down to a previous demand level. And now we're all the way back almost to the supply. Now the 4-hour 200 EMA is just above my supply zone, so that's how I know that it's actually accurate that we can push up into it. But you got to be careful once we push up into that supply zone, right? Because if we hit that 200 EMA, we could push right back down into this area here. But the initial fall down was from the demand zone all the way down to a previous demand zone, and now we've pushed up. We've been struggling to get back up there, but with news and everything coming this week, we could push back on up to that area there. So that's ES. Of course, that will put SPY around 540, and then up here we'll put SPY around 550, 560. And that's just your preview for the day. Let's go to the 1 hour real quick. Day 1 hour. And as you can see, the 20-day 1 hour is confirming that we're in a much smaller range. So you take this and you highlight just that area there. I'd say your floor is about here at 53, 52. And then your ceiling is about here where you see this line that I've had from a previous date. And then we're looking to break through that ceiling. Do notice that the 200 EMA is holding firm, however. Bounced off of that, ran on up to the ceiling, came on back down to the 200 EMA for the 1 hour, held and pushed right back up. And then when you're confirming your trend, we'll go ahead and zoom in on this thing right here. This is the 5-day 15-minute time frame. Notice that we came on down to on Monday. We came down to the 200 EMA, bounced off that bad boy, ran back up, tried to come down. And whenever you start floating above it like this, that means that the market is trending back up. You can use this as your trend line, the 15-minute. Market's trending back up. We have the high yesterday, and now we're still pushing up. Oh, well, the high this morning. I'm sorry, the high this morning, and now we're still pushing up from there. So 5401 would be your new high of the day. You would set your alert there for once we cross that. Wouldn't matter if it was for a reversal or whatever the case was. Let's go down 1 minute, 5-day 5-minute as well. All right, so we're intertwined with the 5-day 5-minute. So the 15-minute is the best one to look at as far as where the trend is going down to. Where the trend is going up to, let's find out. All right, the 1 minute is intertwined just like the 5-minute is, so that's good to see. So you know that you can pull down there and bounce up. You can break below it and push down to this area here, but you got yourself a nice little range from 5370 all the way up to 5401. Where we're currently at, the range will be right here below these lines. So let's go ahead and put a price line right there. Bop. And so now that's your 50% juggle point there. So look, you got the top of your zone, the bottom of your zone, 50% of your zone, right where this little area is, and it's showing that it's support because we couldn't break through there originally, and then we eventually came down with more aggression from the 200 EMA to push down. Now this is a very aggressive trade, and all we're trying to get here is $1,000 to $2,000, honestly. This is the current level of consolidation. You want to get there before you hit the breakout. You know, hopefully we can come to the downside before we hit the breakout. We're only risking 2,300, but we're looking to gain a lot, actually. Let me shrink this down just a bit. I don't know why my take profit is way down there. Take profit's 40 grand. Let's bring that to the 200 EMA. Okay, so let's see. If we were limit market where we are now, going to the downside, the 200 EMA is at 84. That's $11,000. That's more than we need to pass. Like I said, we were looking for the quick $2,000. Modify that to there. That's 2,700. This is 3,000. We'll take the 3,000, of course. And all we're doing is taking current range into account. The current range is $3,000. So if it pushes down further, awesome. If it can't push down further, we'll stay here in the range. That's what we like to see. And that's the max of what the range has been. So we're not going to try to push for anything else. We're just going to try to take what the current range is giving us. If the current range is giving us $3,000 instead of the $11,000, we'll take the current range. Why? Because it's easy money. It's that simple. Take the easy money. Take the easy $3,000. And another thing that I took into account is the fact that we're approaching 8:30 a.m. and actually made $3,200, not $3,000, which is why, you know, I always pull up as it's pulling up as well. And with us approaching 8:30 and the market having news, the moves could become very aggressive in this area that last 5 minutes of the half hour, which is another reason why I was more than willing to exit the trade. And even though it's pushing down further, I can always take another trade. As you can see, I'm at $3,200, which puts me at $7,000 up on this account. And that's what it's all about. It's about building breathing room. It's about building and accumulating more and more money. You don't have to get all your money in one day. You don't have to go for the gusto. Like I could have held out for $6,000 or $10,000 or whatever the case was, or 11,000 if we came all the way down here. But I'd rather have the guaranteed 3 than a probable 5, 6, 7, 11, right? When I know how aggressive this stock market is. And that is something that I want everyone to understand. The stock market is not your friend. It's not going to do what you want it to do just because you're asking it. You need to hedge your theories. You need to be careful and always take profit when you see it, especially if you see a large profit. $3,000, let's get that straight, is a large profit. My next trade will be a 10 contract trade so that I don't eat up any of my $3,000 profit. And then I'll take the same exact 30 tick push that I was talking about before, only risking $1,000 this time, looking for $3,750. You know, but like I said, take the easy money, guys. In 30 seconds, I want to stay here for this next 30 seconds so we can see where this thing goes. But look at how volatile this is becoming. Up, down, up. You know, it's very, very sensitive, the 830. And when you're seeing volatility like this, you're going to see a push hard one direction or the other. Let's make sure we're in market. Let's say I wanted to take this trade right in the next 6 seconds. I'm going to reduce this to 4. And we're going to take the trade when it pops. And as you can see, it popped off, right? I got, instead of getting $1,500, I only got $200 off of that trade, which is another thing that you have to be aware of. We sold out at 53.98. I don't know why we sold out at 50. Oh, because that was my take profit area. Dang it. All right, you got to be careful with this, right? $1,500 should be your take profit area, not the 53.98. We sold out at exactly where I wanted to take profit, but I got in, let's see where the trade entered me. I got in at 53.97, so I sold out for literally $100. So just make sure that when you check these boxes, you click on the dollar amount and not the price, because we could have easily made $1,500 right there. But honestly, guys, that's it for today's video. It's pulling down just as I expected. I hope you guys enjoyed that. Please leave a comment if you have any questions about anything that I'm doing, or you want any type of explanation or some sort of help, you know, so I can make it in an upcoming video. You guys have a great day. You know the motto, take the easy money, guys. There's no reason to play this like fast and loose and try to get $1 million a day and stuff like that until you have millions of dollars in your account. You know, for now, you're just building up. Just take what you can get. Like you see, I took a 27 contract trade. I took a 10 contract trade. And when this pop happened, I took a 4 contract trade. The reason for that is because the pops can be a little unpredictable. You need to go in conservative to protect your profits.